Just to let you know, I'm Chris Brecher with Brecher Trading. I go through a lot of different kinds of ways to trade. I've been trading for 38 years. So I was an option market maker on the CBOE for 8 years. So a lot of people know me for like doing hyper, very short-term trades. But I trade up to, 6-month long trades. And I wanted to show you about IPOs. As you could go to YouTube. There's hardly anybody mentions IPOs and how to trade them. And there are three ways I wanted to show you how to trade them. The one thing I want you to realize is this. Number one, this is the amount of IPOs, and that this is from 2 weeks ago. And there were a lot of IPOs. 16 IPOs all at once is a lot. Number two, when you get that many IPOs, that's usually a bearish sign. What's funny is I thought you'd like is look what came out the same day all the IPOs got issued. Major Wall Street banks are telling clients to be ready for a melt up. A lot of times you get that kind of talk at the same time as IPOs. You got the same thing in 1999 and 2014, which I'll go over in a minute. So the first thing I wanted to show you is why IPOs are bad for the broad equity markets. I don't mean today. I mean the NASDAQ's up like 8 million today. But I'm talking about there was a time to short the markets a couple of weeks ago. And I want to show you what indicators I use. And I like to have 3 reasons to do a trade. And only one to get out when I'm wrong or when I exit a profitable position. But I need 3 to do a trade. But the first thing I want you to realize is IPOs by themselves are fine for the equity market. But the problem is 16 IPOs in 10 days takes away a lot of buying power from investors. That's why you've seen the FANG stocks underperforming for the last 2 or 3 weeks, because for 2 reasons. One is when people buy IPOs, that's like the fast money. So what they're doing is they're buying them thinking they can flip them or trade them. And that's the fast money. There's also other people that buy IPOs, and the brokerage firms, if they let you participate in an IPO, they encourage you to stay in 30 to 60 days. Or they won't let you have a lot of the next IPO. So what happens is it takes away a lot of people's buying power. Now, what also happens is the fast money traders see that the IPOs are moving. And I'll show you examples where they're moving tremendous, like Beyond Meat. And because of that, they're not trading the Apples and the Amazons the way they did even 2 months ago. So what happens is you take away a lot of the buying pressure that you would get in a lot of other stocks, because there's a lot of stocks dumped on the market all at once. The other thing is, you got to feel this way. If corporate officers are all rushing to sell the stock, that maybe they think there's a top, because companies aren't going to be selling at the bottom. They want to sell when it's the right time, where it just feels ripe to be able to then cash in. So a lot of people were worried about that. But what everybody misses is that doesn't mean we have to go down. What it means is bearish macro developments are more likely to hit the market. They're more likely to hurt the equity market because you already have some change in sentiment because people think corporate insiders know something. And number two, you have a lot of the buying power sort of sucked out of the market, so to speak. So what I found in there is if you combine that with charts, and you combine that with obviously the Chinese tariff news, it can affect the market more than it should. That's why I think we're going up today. The IPOs are already out. So in fact, a lot of the market started bottoming the second Uber priced on Friday. So I'll go back and show you some of my PowerPoint, but I want to show you what I'm talking about. Now, we know the markets got hit on Friday, but you're also going to see the markets rallied on Friday. And what you're going to notice is that Uber was selling off. They were reducing the offering price. And the second it opened, the ESs started rallying, almost like sell on rumor, buy on news. Everybody knew it was going to be a disaster. So let me go take you to Friday afternoon. So we know Friday had a miraculous rally. You were down about 40 points on the ESs. Trying to get it up here so you see it. Right there. It's amazing. Look what time Uber opened. And look what time the broad market started rallying. That's just a beautiful thing. So, and that's what happened. Everybody sort of breathed a sigh of relief. All the IPOs are gone. Now, obviously, we had another sell-off on Monday, and we'll go over later what I think is going to happen with the market. But I just wanted to show you that dumping a lot of IPOs at one time can start to sit on the market. Now, the other thing I wanted to show you in here was trading IPOs. And what I've seen in here is IPOs open according to market conditions. So if Uber has an IPO that's priced at 45, that's what the company gets. But that doesn't mean it's going to open there on a trading market. It opens then according to supply and demand. The syndicate is composed of all the people that helped price the IPO. They were worried it was going to collapse. So believe it or not, what they do is they do a thing called a green shoe. This is an amazing thing. They can sell, the syndicate, more stock to the public than how much stock is getting actually issued. This way they create a short position. They do that because they're allowed to support the stock if they want. So then they can short up to 15% of the issue. Well, this time though, there's a thing called a nuclear option that was in their prospectus where Morgan Stanley could short a lot more than 15%. They could have a massive short position because they were worried the stock would plummet and they could buy it back and help the market. Yeah, no, that's not what happened. What happened is they knew it would collapse. They have a massive short position and made a fortune. So I'm sorry to say that, but that's what happened. But theoretically, they do that so they could support the price. So they didn't support 45. It was overwhelmed, but they cleaned up on the way down. It's an amazing story. If you could go online, you'll see about Uber nuclear option with Morgan Stanley, and there it is. So the point is, when they can't support the stock, that price becomes big old resistance. It's a wonderful shorting opportunity. Now, I'm only showing you IPOs, but it also works with secondaries. Today, I was short Twinkies, Hostess Brands. So Morgan Stanley, JP Morgan, I'm sorry, on May 9th, upgraded the stock. In fact, I'll just show you real quick because I think it's fascinating. So Morgan Stanley upgraded the Twinkies right here, made it their Focus One stock right here. Well, yesterday they announced that they're selling 8 million shares for insiders. Guess who's handling the deal? JP Morgan. So what happens is the deal was priced at $13.40. That means that there's resistance at $13.40. In fact, 8 million shares that people are stuck at $18.40. So under $18.40, it's a great short. Now, this is only a $13 stock, but it'll work for a $100 stock if you see it on an IPO or a secondary. It's an amazing thing. So it's just fascinating on how that works. Go back to Uber and go back to support and resistance in Uber, and it's an amazing thing. Look where it opened, right at 45. In fact, I'm going to try to go back a little. I use this thing on Thinkorswim called On Demand. Now, I'm using Thinkorswim, and I'll show you my indicators, but it's the same indicators that Tom and Aaron use on StockCharts. The other thing is StockCharts has a thing coming out called, let me get it in front of me.
ACP.
ACP. It erased on the bottom here, so sorry about that. But ACP is a really cool thing, really interactive. Now, I use a thing called the ATR trailing stop, and StockCharts uses chandelier exit. Same thing. It's just not on ACP yet. So in here, this is really cool how it works, but it just started. So I'm going to use Thinkorswim for today. But what I wanted to show you was Uber a couple of days ago. So when you go, all this is doing is going back to a couple of days ago. I wish it went to October 2019. That would be pretty beneficial. But if you go into Uber and you're going to see when it broke 45 and then tried to bounce, that becomes wonderful shorting opportunity because it has a massive amount of resistance at that price. So that was on May 10th on my birthday. So let's go back to that day and I'll show you. There. And now I'm going to put a 1 minute chart. So as I'm showing you this, I want to show you a couple of other things that I think are tools of the trade. So I use the same thing, like I said, that Tom and Aaron use. I use the 9 EMA. I add that in there. I don't usually see that, but the 20 SMA, the 50 SMA, and the 200. I also use a 9 exponential for short-term trading. So all I'm doing is taking the most basic, simple indicators, because I found that the more basic, the more people follow them. So that's all I'm doing. And you'll find that computer algorithms are ridiculously simple. They use moving average crosses. They use really simple stuff. So that's all I use. You don't have to use expensive indicators. Just use what StockCharts gives you. It's great. The other is, like I said, I use the ATR trailing stop, and I use a 9 and a 2.9. And then I use as my oscillator. Everybody uses an oscillator. I use a 310-16 MACD. You can use a stochastic, an RSI, any of them. We look for support. We look for negative and positive divergence, overbought, oversold. And I also look at resistance and support. So I try to combine them all. So what do you notice about Uber in here? There's the offer, 45. Everybody's stuck at 45. If you're trading at ultra short term, how do you trade an Uber? Well, this is, as you see, nothing. You don't see anything to do yet. It hasn't crossed anything. You certainly don't want to buy it because it's under its IPO price. Now, fast forward about 3 hours. There you go. So this is why I showed you the indicators I use. If you were shorting Uber, that's a low risk entry point at 44.80 because you know you could stop yourself where everybody's stuck. But let's say you didn't do that. Let's say you want to short on the way down. Then you sell right there. You sell when it breaks the ATR trailing stop. This is where it gets to be a little bit of an art because as you see, it's oversold on the bottom. So the next step is this. I usually wait for the first oversold rally. And as you see, even if you shorted there, see the oversold rally? Well, that thing just kept going and going. If you go to the end of the day, so we'll go to 16:39 Eastern. So this is after the close. Look how much you would have made. Let me see if I can get it to work. If not, it went down a lot. Let's just put it that way. Yeah, it worked. Great. There. Look at that. So there were 2 ways to play it. 3 ways, actually. Number 1, you could short when it got above that. I mean, when it was there, because you had very little stop. I love stops. So you knew where to stop yourself. Number 2 is when it crossed there. Number 3 is if it works off the oversold poorly, which it did. It stayed under that red line. And the 4th one, let's say you got out right here, you only made $1. Well, then you see this thing we call a Brecher ledge, which is basically a bear flag with a horizontal bottom. This is how the algorithms target. They target the low. So the second it made that low, it just absolutely fell apart. And that was good for about 2 points in the next 30 minutes. So that was exciting. That's on the short side. Now let me show you some of the long ideas. So the first thing you got to understand, if a stock breaks under its IPO, you look to short it and use that as a backstop. On the other hand, there's stocks that get above their IPO. So I'm going to give you 2 examples. I'll start with a cheapie. So the first cheapie I want to show you is this stock, PBTS. Their IPO was at $5. So you always wait. You don't chase the opening. My goodness, it's a good way to get yourself really hurt. What I do is I wait for a definable chart pattern over $5. That's the IPO. That's my backstop. Well, you can see the definable chart patterns. There's a bull flag there. There's a bull flag there. There's a bull flag there. And every one of those, it stayed over the ATR trailing stop. That's a beautiful thing. So then the next thing you might say, well, where do you get out? I do a thing called a dark cloud cover. Now, it became a bearish engulfing, but when I see a red candle take back half a green candle on a short-term basis, I'm usually out. or you could have gotten out at the ATR trailing stop. But that's from 540. You're making 50%. That's pretty exciting. So I just want to show you how that worked. That's one way. Now let's go to the real big one, the meat of the charts. No pun intended with Beyond Meat. But watch this in here. This is fascinating. Number one, this stock has been in an uptrend ever since its IPO. Every single time that this stock is in an uptrend, and what I mean, it's over its 9 EMA. It wasn't all the time, but every time it reclaims it, every short-term bullish pattern has exploded. But I wanted to show you what it did on the exact opening, the day of its IPO, because you can make money on this. As long as you don't mind short-term trading, all you have to do is you have to have your stops in place. On a stock that's very, very liquid, Beyond was trading millions of shares. I usually use a tick chart on the opening, on the exact opening of the secondary of the IPO. When you do that, it becomes a whole different kind of look than a 1-minute chart. Look at that. So right here, I just want to show you this. That's at 12:19 on May 2nd. So now we're going to go to 12:15 on May 2nd. We can even go to 12:40. This is what I want you to see. If I could get it to pre-buffer, give me a second for it to work. As you see, it needs to build the chart, so to speak. But the point is, you don't buy on the opening. You just don't. That's very dangerous. What you want to do is buy when it makes a new high. See on how it's already over its ATR trailing stop. If you buy right there, you know where to stop yourself at the low at 45. So you're buying at 46. Yep, you're buying on the way up. But as you see, you would have stayed in all the way to 60. So that's just an amazing thing. So what happens is go to as short a time frame as you can. That's what I do. Now, fast forward to today and go and check out what's going on, which I think is really cool. You go into Beyond and you go to a 1-minute chart. So you go to the left and you look at an hourly chart and you see that the ATR trailing stop, that's usually my definition of an uptrend or a downtrend. Now, on a short-term basis, is looking at, let's say, a 15 or an hourly chart. A daily, it's already in a monster uptrend. Now, when you look at an hourly, I think you'll see it a mile away. You could see the bull flag developing. You can see that. A lot of people bought on the way down. Don't do that. Buy with the bull flag developing. So go to that time, which is going to be Monday at, at 3 o'clock. Now, check this out because this is pretty exciting too. Monday at 3 o'clock, look at this. This is another thing about IPOs that I see all the time. You could see a bull flag, but I like when it breaks. So it was a better buy Monday afternoon over 72. So actually that was on Tuesday. It's not showing scale right. It was a better buy over 72 than 68 because you didn't know if it would go to here. That's an exciting thing. And as you see, it rode the ATR trailing stop for a while. That's last Monday. Sorry. So now fast forward to in here. Go to today. This is so cool. Go into here and put Beyond Meat in here. And look at Monday. Made a new high. Yep, even on Monday, when we went down, the stock exploded. A lot of us were buying it here and selling it at 72. If you go to a shorter term chart, you'll see why. Let me be sure I get the scale right. Because of that, well, that's today. Because of this one. Because of that move, that symmetrical move, all they are is bull flags. So when we see bull flags, we just jump on the bull flags. Let me get specifically in here. Right here. So you had the little bull flag, and we took profits in here. Just little bull flags. Little 3 points, 3 points. Now fast forward to today and check this out. Look at the bull flags on the way up. That was from yesterday. So I told you about the 72 exploding. If you miss the opening, which is fine, these stocks move so much that this is why people aren't trading Amazon. I mean, Amazon's up 21 today with the NASDAQ up 80. That's like it being down. I mean, this stock's up 11%. Bull flag, and that's from Tuesday. Now check this out. We went down this morning, and look what we formed. A little inverse head and shoulders. That's just so exciting. And the stock just exploded on you all day. So very exciting. So that's how I trade like the Beyonds. Now, the last thing I wanted to show you is how to short longer term. Not buy longer term, but short longer term. And I hope I'm not running over. I don't think I am. So I hope this is okay.
No, you're fine. You're fine right now, Chris.
Oh, great. All right. The other thing that I do is I like to short these after 3 months. Now, I combine chart patterns, but I want to show you what I mean. Is after 6 months, insiders can sell the stock. So what that means, it's called an insider lockup expiration. So the more stock that has been locked up that wasn't issued to the public, the more that can be dumped in the broad market after 6 months. That's exactly why Tilray, we were shorting it all the way down. Let me show you what we're talking about. This is Tilray. Believe it or not, what happens is traders start positioning for the insider lockup after 6 months. They start positioning 3 months before the lockup. I've seen it a million times. Go and check out Tilray. The insider lockup was July 9th. The IPO was July 19th. Guess when it started going down? In September. Started a little early, a little wick, a negative wick there for sure. But the way we trade it is not to try to pick a top. We wait for these kind of trend lines. They are so reliable. So if you look, that's exactly 3 months after the IPO. See the trend line I drew in? 3 months. That went from 140 to the insider lockup, which was 6 months, is January 1st. You're out at 70. So it's just amazing how that works. Usually what happens is stocks start selling off 3 months before the insider lockup. Then the insider lockup, there's like a crescendo in volume. And usually then it takes a while to bottom. And that's what we've seen in Tilray. Let me give you another one that worked great, is Twilio. So Twilio, exactly 3 months. In fact, I did an article for Investors Daily that just happened to come out that day. That's just lucky. But that was exactly 3 months. So a lot of times what we do is we don't short after 3 months. We short when we have 3 reasons. So what we did is we looked for the trend line break. That. Just like Tilray. Did I miss the first 14 points? I sure did. But we had the direction was then known. And then we made the next 20 points, 30 points. And as you see, the stock sat forever. Now, just to let you know, longer term, look at that. It took that long for it to work off all the damage from the insider lockups. The second it reclaimed that 35, just this rectangle, the stock's been a monster ever since. So don't think just after 6 months you buy it. You got to wait for it to repair its damage and to form some good structure of a chart. So a lot of these stocks, I'm going to be eyeing that have insider lockup expirations coming. So what I do is I go to a thing called IPO Scoop. It's free. I love free, except for my site, but I love IPO Scoop. So all I do in here is I go through the last 100 IPOs. All you do is go to IPO Scoop and look at the last 100. And then I go through the ones that were issued around December, even a little later, and see what's going on after 3 months prior to their insider lockup. And I usually like the hot issues. So you have like Silk Road. That's, though, is April. It's not time yet, so it could still go straight up. You got Lyft. You got Levi Strauss. You got a lot of these. And if I see them start to break down, I'm going to short them. But you got to wait for that trend line break. And we just don't have that yet. But that's what I'm watching. So those are the kind of things I'm watching. Now, when it comes to what's going on now, with the market, you might say, well, you said we're going down. I showed you the trend lines in the in Tilray. I showed you the trend lines in Twilio. This is when we got short. Not on the way up because we're opinionated. We got short when you could draw the lines. Usually we do 3 strikes, you're out. If you see 3 lines that you couldn't draw as point of contact. So did we short right there? No, we waited for us to work off the oversold condition. So we weren't in for that. We were in for that. So we made that quick right here, about 25, 30 points in about 5 hours. Now you might say, well, are we going down now? And my thing is I combine a lot of different indicators. And number one is sentiment. And I'm seeing the sentiment too negative. Now you might ask what I'm meaning by that. I do a thing called the StockTwits sentiment table every week. So StockTwits has a sentiment they show in ETFs using their algorithms, however they use them. And what you're going to see in StockTwits is before the IPOs, the sentiment was really bullish. Now the sentiment's really getting bearish. Usually the SPY, which is the most active ETF they follow, usually under 50% bullish. That's a warning tell not to short when you're oversold. That's number one. Number two is the ES itself is oversold. So I'm watching both of those. Usually I want to see how we work off the oversold condition in the markets. And are we going to work them off by forming like a bear flag? So you have to work off this, and you have to work off the bearish sentiment going on in the broad markets. And so I want to see in the next week or two how we work off the bearish sentiment. It could take a week. So I have no problem being patient. So that's what I'm doing. We shorted in here when we were worried about the IPOs. When we had any bounces, we looked to buy the IPOs that acted great. And we looked to short the broad market if we had our triggers. So that's what I've been doing. So I hope that helps. I hope you like the idea of the short-term shorts in IPOs, short-term longs, and the long-term ideas of short ideas, like Twilio.
Okay, first of all, great presentation, Chris. I can tell you, I haven't been somebody who has traded IPOs when they first come out. I think you've presented some great arguments on how you certainly could set up some nice reward to risk trades doing that. But like any trade, you want to make sure you have your stops in place. So very, very good presentation. I do want to remind everybody, I have some questions here for Chris. We're going to go over in just a minute. But I do want to remind everybody that we're running a poll, and I would really love to hear how everyone out there trades these IPOs. So it's just a matter of how long do you typically wait after an IPO? Do you trade it immediately when it comes out? Or do you wait a week, a month, 3 months, 6 to 12 months, or more than a year? And so if you'll fill that out, I'm going to have Chris, I want to go over that poll, those poll results with Chris and Aaron here in just a couple minutes. But before we get to that, there are some questions. One, you had mentioned earlier about syndicates, and one question that came in and said, how long can the syndicate manipulate the IPO? In other words, how long should I wait before considering an IPO? And I think you may have answered that a little bit later in your presentation, but what are your thoughts there?
Yeah, that's a good question. I don't know the rules of how long they can manipulate, but let me show you what we're talking about because it's a great question. Like Twinkie today, I know it's Hostess brand, but it's TWNK, and I always think of it as Twinkie. So I don't know. Once it broke the syndicate price, you always wonder, is the syndicate giving up? And all I know is there's a lot of people stuck at 1340. Of what I've seen, it's usually only 1 or 2 days that they're usually gone by then. They usually have washed out their position, but I don't know. Like tomorrow. Let's say the syndicate bought a ton of stock at 1340 and it gaps up to 1350. You got to think the syndicate is getting out of what they had to buy. So I would think it's a week or two. Usually, let me give you for instance, Yeti did a big old secondary. They were an IPO back here. In fact, this is one of those 3-month rules where Yeti could actually, go down for the next couple of months. But they did an IPO at 38, a secondary at 28 50. And it's just, as you see, it's just been blah for 7 days. So and every time it starts to get hit, it miraculously comes back, even on Monday. So I'm thinking the syndicate is still sort of out there. You can sort of feel that when it has a bear flag and it's not working, that maybe the syndicate is out there still messing around. But I got to think they're only there a week or two.
Yep. I will also add, too, with that Twinkie discussion, I always wait for the gap to fill for Twinkie. That was a pun.
Oh, that's a good one. We do those on my side all the time. Most people go crazy with them. So I try to refrain from too many during the day. So that was a good one.
Sorry, I couldn't resist. All right, another question. With regard to the ATR, the average true range, what do you use as your stop, or what are you looking at on the ATR? Is it a one-time ATR?
Oh, it's the ATR trailing stop. So it's different. It's based on the average true range. And that's why if a stock goes bonkers like Twinkie, when it went straight up, you'll see the average true range went up. So the trailing stop is farther away. So you got to use something else, either a shorter time frame or like the 20 SMA. But I use a 9 and a 2.9, but this is how I usually do it. I usually take 6 grids, and I use the ATR trailing stop on multiple grids. So like Apple. Let's say you wanted to short or buy Apple today. So it's in a downtrend on a daily. I'm just going on the red line, the ATR trailing stop. So it's on a downtrend here. This is where it gets rough because it's over it there. It's over it there. It's over it there, but it's under here. So if you're an ultra short-term trader, you can mess around with like a 2 or 1 minute ATR trailing stop. If you're thinking of finally getting back in Apple, my personal opinion, because Apple has been amazing stock long-term with the ATR trailing stop, you short it when it's under here and sell every rally. And you buy it here when it gets back above it. It's been an amazing stock because so many people watch it. So to me, technically right now it's in a downtrend. The problem is it's oversold in a downtrend. A lot of stocks are like that. So I'm waiting to see how they work off their oversold condition before I jump on the short side again.
Makes sense. All right, a couple other questions. Number one, because these IPOs are so volatile, do you have any problems holding them overnight? You get into a position, looks really good, you're holding it. Are you worried about the next morning?
Absolutely. I mean, I've been doing it 39 years. I'm still respect the market every day, day in and day out. That's why I put in stops. You might be like, oh, so much, you don't need stops. My goodness, you need stops. Usually in a choppy market, I will not stay in overnight. So if there's 16 IPOs, I'm much less likely to stay in overnight, even if the stock looks good. And as you see, believe it or not, you go into Beyond Meat, and almost every single day it opened down. Every single day, it's uncanny. This one opened up a little, but you didn't need it. It sold off on the close. So because they move so much, you can initiate after the opening and not have to be worried overnight. I mean, my goodness, that day when the ESs were down 48 points before the opening, if you were in it, you probably would have had more of an emotional attachment than if you would have just bought it when it made a new high. So when you have this many IPOs, I usually don't stay in overnight. Now, there is a different side to this. When you take a small stock like I showed you, and you take this stock, there's a quiet period, PBTS. So what happens is the company can't comment on their earnings, and analysts can't upgrade or downgrade. So a smaller stock like this, sure, you could, if it closed right here, it's not going to be affected as much by broad market movements because it's a cheapie. So you're more likely you could stay in overnight. So that's how I look at it.
Okay. Well, why don't we go ahead and pull that poll up, and we'll take a look at what's going on there. And while we're looking at this, maybe one final question for you, Chris, and that is, liquidity. You mentioned liquidity earlier, and you said that, I forget which stock you were talking about, but you said, liquidity wasn't a problem. Millions of shares were trading. What becomes a problem in your mind in terms of liquidity? Is there an average number of shares per day?
No, that's a great question. Well, beyond Uber, all those are doing great. But the way I did it is I took all the IPOs for, let's say, a week ago. So I went to IPO this week. And if I see them 70,000, 56,000, I just take them off. So now on the opening, you knew Uber was going to be big. You knew Lyft would be big, Beyond Meat. So I just sort them. And usually I just throw these away because you want to make money trading and you can't scale these because look at the bid and ask on this one, 1683 to 1710. You can't put a stop in. It's just too dangerous.
Hey, Chris,
so I usually, if it's under 100,000, I get rid of them.
I'm sorry. We couldn't see your screen because we have the poll up. I just wanted to let you know.
Oh, sorry. Do you want me to reshare?
No.
All right. Usually if a stock has less than a couple of 100,000 shares volume on the second day, if it doesn't do volume by then, it's probably not going to do volume. So I usually take it off my screen.
Okay, perfect. All right. Any surprises here? We got about another 30, 45 seconds. But looking at this list, it seems like the majority of the group, I mean, when we take 39%, the other 20 and 20, I mean, we're talking 80% of the folks here wait until at least 3 months of data is available before they trade. It sounds like you're pretty excited to get in immediately on some of these IPOs if they set up appropriately.
Yeah, you have to understand that historically, 3 months is the worst time to get in because that's when traders start positioning short, anticipating the insider lockup after 6 months. Mm-hmm. So usually the sweet spot is if you get some consolidation the first week. And obviously, if it's a market like February 2018, you just back away. So I always try to consider market conditions, but definitely I wouldn't do it after 3 months, maybe after 6 months if the chart starts turning. And then the insiders have already dumped.
Awesome. Well, I normally, I like to have some history in the way I approach the market. So I would say for me, it's probably a minimum of 3 months, but I certainly can appreciate many of the points that you made today from an ultra short-term perspective, of course, and keeping stops in play, which is always important. Very, very enlightening presentation, though, Chris. Really appreciate you taking the time to come on and talk about IPOs. We really haven't focused on them that much during Market Watchers Live, and I know we get a number of questions. So, again, I just really want to thank you for stopping by and really appreciate your presentation today.
Yep. Thanks for having me on. And am I allowed to plug my site?
Yes, absolutely.
Of course.
Sure. It's BrecherTrading.com, and we have a free 10-day trial. Just go to BrecherTrading.com and try it out. It's our retention rate on trials. I mean, usually it's like 5% for people. Ours is 60 to 70% to try the trial, stay on. So that's pretty cool. So it's been going great.
Awesome. Again, everybody, that's BrecherTrading.com, BRECHER, BrecherTrading.com. Chris, it's been a pleasure. Thank you so much, and we'll have you on again soon.
Thanks. Thanks for having me on. Take care.